I think of Ethereum as civilization scale infrastructure. I think of it as a new trust foundation for the planet. I think of it as digital oil, or Ether's digital oil. I think of Ether as the highest octane trust commodity that the world has ever seen, that powers transactions on this new kind of software, trustware, the Ethereum technology. And so it's too big to describe with one metaphor, which is why we use all of them. And yet Tom Lee came out with this simple statement a few days ago, which kind of captures it all and is really intelligible by the lay audience. He said, Ether is the next Bitcoin.
Here we are with Joe Lubin, CEO of ConsenSys and Ethereum co-founder on the Defiant podcast again. Joe, welcome back. It's so great to have you.
Hey, Cami. Good to see you.
Okay, so was very excited for this conversation with you and your dog. He's adorable because I think, you've always had a really, important role in the Ethereum ecosystem, obviously as one of the initial co-founders, and then with ConsenSys. Then recently you've taken a new angle here with accumulating a bunch of ETH with SharpLink. So would love to hear your description on what led you, like what's motivating you with this strategy, and if you can describe the strategy itself, like what's the end game for SBET?
So our thinking started by just paying attention to what Michael Saylor was doing with the strategy, formerly MicroStrategy, and he's just doing remarkable things. His problem was that he had treasury assets that didn't retain their purchasing power, and he felt like he was fighting an uphill battle, given that there's so much debt in the system, and the U.S. government was likely to have to print lots of money, and so there's a long-term structural problem developing. And when we took a look at it, we figured, hey, we can do this same thing. We can run his exact playbook in terms of the different kinds of financial instruments that we offer, straight up equity, common equity, and preferreds and convertibles. But Ether is a productive and yielding asset. And so for all the Ether we purchased, that Ether would be put to work in staking and restaking and DeFi, and could be used to do what he's doing. He calls it growing Bitcoin yield. And by that, he doesn't mean he's earning interest. It means he's growing the amount of Bitcoin per fully diluted share of equity. And so his pledge and his strategy is all about just ensuring that if you have a share of strategy of MSTR, then you will constantly see the amount of Bitcoin underlying that grow over time. So we can do that, but we can do it much faster because we're taking in lots of US dollars in exchange for equity. We're immediately buying Ether and we're immediately staking Ether. And so we don't use the term yield the same way that he does. In Ethereum, there's already native yield in different kinds of protocols. So we've termed it Ether concentration, where essentially we pledge that, or we believe that through our operations, we will constantly grow the amount of Ether underlying each fully diluted share of SBET. And so that's a remarkable thing already, and it serves a huge need in the Ethereum ecosystem. The Ethereum ecosystem has been building for the future for a long time, and we think that future is now. And so in order to really launch us into the future, what we need to do is fix two more issues that we have. We fixed the scalability issue, so we can now add horizontal and vertical scalability as necessary. We're doing a pretty good job on usability, and we're going to be doing a great job on usability as we get more AI into user interfaces. We fixed affordability. There's a ton of block space that's cheap at layer 1 and layer 2, and the US political system fixed the problems we were having as the United States of America tried to make it really hard or impossible to be a blockchain company in the US or to be a company and use tokens, or be a company and issue tokens, or be a company and use DeFi, or be a builder and build something, build a startup in the Web3 space. That was not a smart idea to pursue, given that you're probably going to have a tough time getting a bank account, or be debanked if you get one, or have the SEC chase you in its inquisition of our ecosystem. And so the builders stayed away and the companies stayed away. And that is all over now in a big way. And our ecosystem is surging because of that. But because of that, we don't have a ton of applications and we don't have a ton of users in our space. We have lots of people holding tokens, but it's really crypto financial nerds that are playing in DeFi, crypto art nerds. We're playing in NFTs and even meme coins, and protocol nerds are still building deep infrastructure. And so we need the best and the brightest builders from the traditional economy and Web to come in and build in our economy using Web3 primitives, which enable people to build essentially of, by, and for the community, rather than building in an adversarial nature with your users. And when we have the applications, we'll have many more users. I think that'll really kick off mostly in DeFi. And we're seeing TradFi recognize DeFi, explore DeFi, and onboard itself to DeFi via these treasury companies, via stablecoins, and perhaps most importantly, to really ignite this next phase of development, this next decade of Ethereum, is to get supply demand dynamics for Ether into a healthier form. Because there's so much block space and there's not enough transaction volume, there has been too much Ether out in the world, and that resulted in supply demand slackness and malaise in the ecosystem, because price drives sentiment. And so we recognized that if we could raise lots of capital and start buying Ether, and if we could inspire other projects to do the same, that we could take lots of Ether and lock it away in different protocols for a long time, and really tighten up the supply demand dynamics. And so you're seeing that in full force right now, and it's going to keep going for a long time. The other really interesting idea is that Ether and Bitcoin are really the only rigorously decentralized protocols in the world. And if you believe that the world is going to move increasingly on the path of decentralization, then both of these are going to grow to be very, very valuable in comparison to where they are right now. And stacking up big piles of what I think of as highest powered money, decentralized money, uncensorable money, I think that's going to be an important construct for the next economic supercycle, so the next 80 or 100 years, potentially.
Perfect. Okay, so the motivation, summarizing greatly for SBET and SharpLink, is to make sure that the supply demand of ETH is such that there's more pressure for the ETH price to rise, therefore just igniting this cycle of interest and activity and more buying and more innovation, because as we saw, kind of underperformance drives the opposite, kind of, just skepticism.
So it's a great business model. We believe it's a long-term money-making business model. Mm-hmm. It lights a fire under the Ethereum ecosystem, and we're building a business that is accumulating a huge amount of high-powered money. And if you have giant piles of high-powered money, mm-hmm. ask Berkshire Hathaway, they have giant piles of low-powered money. You can do pretty profound, societally beneficial things with it. You can think of this strategy or this construct as similar to what happened after Bretton Woods, where the US dollar was effectively made the reserve asset of the world, and that created imbalances where the US was trading paper, treasuries, and US dollars for goods and services around the world. And that led to a structural trade in which US treasuries went up in price and down in yield for about 3 decades. Similarly, in Japan, the massive disinflation that they experienced after their boom led to about 30 years of the Japan carry trade, where you borrow in cheap yen and you put it in higher yielding assets. So those kinds of structural things in an economy can drive trades or strategies that can last for a very long time. And I at least believe that this decentralization trade will last for years or decades.
Do you have a target for the percentage of ETH outstanding that you want to buy, or maybe it's a dollar amount target that you're looking for?
So we're going to keep raising money and turning it into Ether, and we're going to keep deploying the Ether in productive, yielding ways. We don't have a specific volume or amount of Ether that we're trying to buy. We don't have a specific price that we would love to see Ether get up to. But if we think about it in terms of this stablecoin phenomenon, the United States is excited about our ecosystem because it needs to grow. So the US has been trying to reduce expenses, but austerity is un-American, so that hasn't been working very well. The US knows it needs to grow out of the debt that it's in, and in order to do that, it'll deregulate and it will make use of our technology, because our technology can make things much more efficient and effective. The US will try to has successfully weakened its currency in terms of exchange rates, and it needs to do that in order to reformat trade imbalances, make the dollar cheaper and its products more attractive. But the US also, in its effort to maintain political primacy, it needs to keep the dollar politically strong. And what that means is the US can enable the world to dollarize. So many countries that are in challenging economic situations where they have high inflation or tyrannical rulers who financially repress or exploit their citizenry, those tyrants are going to be weakened in their ability to exploit, and the people in those countries will be able to have access to stable stores of value and maybe even access to the U.S. legal system if they're transacting in U.S. instruments. Not sure about that, but this entry into our ecosystem by the U.S. is both incredibly wonderful to see, validating for us. It also perhaps represents a threat to our technology, a threat to decentralization, because all these stablecoins are based on centralized institutions. And so if there's a future administration in the U.S. that doesn't like decentralization, that prefers to control all aspects of life centrally, then our technology would become very inconvenient. And so what we need to do is have decentralized stablecoins, coins like Make or Die or Sky product that are CDP based or over collateralized based instruments. But there isn't enough Bitcoin and Ether in the world in order to support enough of that. And so what we need to do in order to make the financial system more decentralized, the DeFi system more decentralized, is to grow the price of Ether and Bitcoin enormously so that we have enough decentralized economic bandwidth in order to operate at global scale.
That's a really interesting long-term effect of the rising ETH price. Of course, rising price drives attention and builders and so on. But you're right that it also enables a truly decentralized stablecoin, because the reason why MakerDAO / Sky now started adding USDC and centralized collateral was because it couldn't scale enough with ETH. So
exactly.
Yeah, I hadn't thought about it that way. So that's ETH price rising also enables more decentralized assets by having ETH as collateral.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300 plus projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
Going back to SBET for just a couple of questions, wanted to ask you about what do you think makes SBET attractive for investors versus an Ethereum ETF, especially now that BlackRock and others are filing to add staking to the ETF? Like, why would an investor buy SBET versus an ETH ETF, especially when there's staking?
So the ETFs will have lower yield. They won't be able to stake all their assets. They'll only be able to stake in vanilla ways. so earn less yield, and they charge fees. So there'll be a fee drag as well. But they're good products intended for different kinds of audiences. We'll have different kinds of investor types. Retail traders will have convertible bond buyers that appreciate different strategies that they can run. With the fact that we have we'll have a pretty rich options environment around the equity. Bond buyers are often pretty comfortable with 5% yield, but a convertible bond buyer would benefit from seeing potentially much higher volatility or much greater upside.
So will you be deploying ETH in besides layer one staking in DeFi too?
Yeah, absolutely.
Oh, okay. So
currently we're doing it pretty vanilla, but we're working at plans to do more exciting things.
Interesting to see more kind of, like large scale use of DeFi in the works. Like the EF is doing that with its treasury. You're going to be doing that with Sharplink treasury. So it's good tailwinds.
Other things we can do, because Ethereum is programmable, is we can put some investment contracts on chain potentially. We can, it's complicated, but there are a lot of projects trying to tokenize public equities currently, and that's really exciting. It's also potentially problematic in some cases, and Hester Peirce has sketched a short warning. Despite being the matron saint of decentralized protocols, she's also saying, hey, wait a sec, there's some serious issues that we need to take a look at. And if we allow people around the world who aren't subject to effectively to the U.S. securities laws, it could put some companies into difficult positions if they're holding large amounts of equity. And so it's doable, but we need to figure out how to do it in a healthy way. We at Sharplink Gaming are very interested in exploring what we can do in terms of tokenizing our equity. And one exciting benefit of that is that unlike in the current environment where it's not easy to know that somebody holds a share of Apple or NVIDIA, because it's really owned by Seed and Company, which is owned by DTCC. And so you're getting sort of arm's length ownership of your shares through this securities industry infrastructure. And what we can do is there can be equity in an SPV, and we can give people ownership of a token that controls a share in the SPV. And then we know who owns the stock effectively. And so just like in the NFT ecosystem, we can do token gated experiences or perks or something like that. So it could really change the game for public companies in terms of how they engage their owners and users.
That'd be really interesting to see, and maybe easier to pull off from a regulatory perspective than current equity tokenization experiments, because in the case of Robinhood, they are offering derivatives of equity and not equity itself. But if you're like the primary issuer of equity and the token, maybe you can just map them together more, and maybe it's just easier to regulate that way than through kind of a derivative.
There are different ways of doing it. You can just track the price movements and do contracts for differences and just make sure people are getting paid based on what the actual stock does. You can put a whole bunch of equity in a special purpose vehicle. You can have an arrangement where when people are buying tokens, you're actually buying equity. When people are selling, you're actually selling equity. That only works during market hours, and you can combine some techniques. And so I think that's what Robinhood's going to be doing, a bunch of different things in order to make it all work and feel smooth.
Yeah, no, it's really interesting times. And then the kind of last SBET question I have is on the risks that this might pose for the just ETH price going forward in the case that there is a prolonged bear market or like a sharp downturn. What's that?
What risk? It's going to get too high?
Well, the opposite can happen, as we've seen. And so, there is kind of this concern if there's leverage buying of assets in a downturn, liquidations can turn a bear market or a decline in price and make it even more pronounced. How do you see that playing out?
Yeah. So if you're hoping to build an Ether treasury company that lasts for decades and has a giant impact on the world, you probably want to take a very prudent approach to risk management. And so we're not levered at all currently. We'll probably do some things that involve small amounts of leverage. And we will, I believe, never get ourselves anywhere close to a position where we're forced to do something that we wouldn't want to do. And that thing would be selling Ether, which is just not the worst thing in the world, but certainly not the point. And so we will manage our risk and our leverage very carefully.
Great. Okay. Now we've talked about what you think drove ETH underperformance before with, right now not enough activity and usage and just a lot of cheap blocks or just like a lot of ETH supply. So, but you've also said that you expect ETH to outperform Bitcoin going forward and to even potentially flip in Bitcoin. So what do you think the drivers for this outperformance will be?
Just the two protocols are very different. They have different use cases. Bitcoin has one main use case, and not, people are trying to make other use cases possibly work, but I haven't seen anything successful on that front. So whether it's Lightning or layer twos, a little bit of success in the Bitcoin NFT space. So Bitcoin is basically gold 2.0. A lot of people feel like it's perfect and complete, shouldn't evolve anymore. It's going to have to evolve for quantum computing reasons, and people are working that out as we speak. So $20 trillion gold TAM is maybe their target audience, and some portion of that. Ethereum is, I believe, increasingly being seen as the infrastructure for first the future financial system of the world. And then once that gets established, and that's really accelerating right now, which is why you're seeing some of this run up. We're talking to nations and major financial institutions who are understanding that, hey, they're unshackled. The SEC isn't going to stop them anymore from doing innovative things, and so they're now able to execute some thinking and planning that they've been doing for a few years. So TradFi is absolutely moving to DeFi. It's coming on to DeFi. Beyond that, once Wall Street gets fully engaged, so first financial institutions, then Wall Street traders get fully engaged, and once Main Street sees that, hey, Wall Street's all talking about these tokens, Ether's going up in price, Ether races towards its all-time high, Ether surges beyond its all-time high. Journalists, we love journalists, especially when they say nice things about our technology, and they'll have an opportunity to do that because things are going to get very energetic and exciting in the Ethereum ecosystem going forward. We and others are working on social graph technology, decentralized identity technology, and so once this first wave involving mostly DeFi and brings in lots of institutions, enterprises, and people, then I think we'll have the incentives in place so that lots of great builders start to build applications on decentralized protocols and decentralized networks of social graphs. So we will become the substrate for the global financial industry, and we will move the world's applications from Web 2 walled gardens to the re-decentralized World Wide Web. So that's why it's going to flip.
That's the vision.
It's going to massively flip the previous economy.
So the thesis is the TAM for Bitcoin is Bitcoin's use case is digital gold at a 20 trillion asset, but Ethereum's target is bigger. It's the entire financial system, the web.
To be a substrate for the global economy, and it's going to be a much more valuable global economy than it is today, because AI and decentralized protocols are going to drive growth. If we think about decentralized trust as a new kind of thing, and it sort of changes how much value can be created in the world. So the world currently operates under centralized trust, where authorities imbue intermediaries with power and trust, and the intermediaries run systems of the world by maintaining trusted third-party databases, which hold ledgers of who owns what and who has what rights. And that is pretty good for building a society, but it's not really that good for most 99% of the people in this society. And so we can do better, and we now have the tools to build a more decentralized world. So Satoshi Nakamoto had issues with centralization and invented a new kind of database technology and invented a new kind of trust, decentralized trust, showed us how to implement decentralized trust with a blockchain that enables anybody to inspect it or anybody to use it or build stuff on it permissionlessly. And we've taken those ideas and we built decentralized finance on it. And so we are now able to operate and govern in a much more decentralized world. And that's going to enable all the industries of the world, all the applications of the world to build differently in ways that are much more enabling for people and communities. And that plus AI is going to lead us into an economy that is going to grow much, much faster than anything we've been able to do so far. And so if you think about trust, what is trust? Hard to define. We've thought of it as a new kind of commodity, kind of virtual commodity, where if you add the virtual commodity of decentralized trust to a transaction, to a relationship, to a process, a set of activities, then that decentralized trust virtually guarantees that they happen fast, guarantees that the agreements in place get done really quickly and you don't need a whole bunch of lawyers. And once you've made an agreement like that in a smart contract, hey, anybody can use that really inexpensively. You don't need to hire lawyers and have issues around it. You can take each one of those value creating events and you can squish more of them into a unit of time. So you can effectively compound value creation. The value of compounding is pretty enormous if you're just growing on larger and larger amounts of value. The TAM of Ethereum is not with this new trust commodity, this new highest grade trust commodity called ETH. It's not just the size of the current economy. It's probably orders of magnitude larger than the current economy because we're all going to grow very fast.
Okay, two follow-ups. In what timeline do you see ETH becoming the substrate of the global economy and web? And what will the price of ETH be then?
So it's happening faster and faster. We're still a pretty small part of the global economy, but the paradigm shift towards bringing things on chain is accelerating. And I just don't think it would be meaningful to give you a number regarding what the price of Ether would be. And it's obviously going to go up at various stages of the parameter shift.
Right, but what's that?
What price do you think it'll be in 5 years from now?
No idea.
Exactly.
I'm just a writer. You're the finance guy here, and the ETH accumulator. But I don't know, for back of the envelope calculations for kind of this financial system TAM. If you go through kind of that mental exercise, have you kind of sketched out an idea of what that could be?
Yeah, we do some thinking about that, and the problem with doing that, people like to put numbers on things. The Etherealized people put together their excellent report thinking about Ether as essentially fuel or digital oil. And so they put some number on it, maybe tens of thousands of dollars. We put together a really interesting thought piece on Ethereum as trustware, on Ether as the highest octane trust commodity. So Ether in that situation both powers transactions and storage on the Ethereum platform, but also if you apply Ether to any sort of activity on any of the Ethereum related networks, then it guarantees execution and brings a lot more trust into the situation and probably adds a ton of value there. And so we looked at some narrow situations, and I think we got a range up to $20,000. There's a sort of bear case, bull case, and mid case. So I think it's misleading though, because you're really only looking at one sort of use case, one characterization of what Ether does. What we may end up doing in the second chapter of this work is take a look at all the different kinds of business sectors there are out there, and sort of guesstimating how much value, how much savings we can find, or how much value we can add to business activities in those sectors. So more to come on that front.
Okay.
Look for version 2.0, which will probably have a chapter with lots of numbers in it. Big numbers.
Interesting. Big numbers, I'm sure. But for now, like the DK range is maybe a ballpark.
What if sending crypto felt more human? Pulse just launched Red Packets, a new way to gift tokens with meaning. It's gasless, gamified, and claimable inside group chats only. Think airdrops meet social cues on-chain. Backed by smart wallet tech and live across major L2s, Red Packets turned communities into microeconomies of gratitude and growth. No seed phrases, no friction, just connection with value. Check it out at pulse.social.
Do you think, though, that Ethereum will be the only blockchain to secure all this trust and activity and transactions? Because maybe a risk to that valuation model is that Ethereum is not the only one doing that.
Yeah, I don't think anyone thinks that Ethereum will be the only blockchain system in the world going forward and eventually. I do think that Ethereum, because of its current massive lead, because the size of its ecosystem, number of developers, amount of infrastructure, specification. I don't know how many blockchains have an actual specification that enables teams to come along and build clients for their blockchain. Really hard to do without a specification. And so if you don't have more than one client keeping the network operational, then you risk one client having a bug and then your network stops, which is not the kind of platform that you want to run critical global infrastructure on. As you're aware, Ethereum cut its first block, its Genesis block, July 30th, 10 years ago, and has been running nonstop, pretty close to flawlessly from a protocol perspective for nearly a decade. And so that's the kind of civilization scale, mission critical infrastructure that you can build an economy on. And we also need lots of different kinds of databases. We need super high throughput databases like Mega ETH. Linea is going to run Linea Layer 2 technologies, going to have some exciting characteristics, including high throughput. Projects like Solana, Dose, Sui, many others have valuable characteristics for certain kinds of use cases. I think in the not too distant future, we'll start thinking about just building applications. And the applications will either sit on software development kits or operate through AI agents, and the underlying blockchain infrastructure will be less important. The builder will pay attention to that, and the builder will choose the appropriate kinds of database characteristics in the different blockchains that will be necessary. The other consideration is sort of geopolitical, where the world is going to move on-chain in the same way that the world moved online in the 90s and the aughts. And so we're going to see nation states and companies and business sectors, gaming ecosystems either establish their own layer ones if they don't need a ton of security, or if they're willing to pay a lot for expensive security, or building on Ethereum, building a layer 2 on Ethereum layer 1, or building a layer 2 and layer 3s and layer 4s. So if Canada wanted to set up a bunch of financial and governance, civil infrastructure on blockchain, which is a smart and transparent thing to do, even voting perhaps, then it would probably be best to set up a layer 2 to give all its provinces different layer 3s. The provinces can give layer 4s to some of subdivisions. So I think the future of on-chain, online, of decentralized protocols will be that there are geopolitical constructs that we see with different kinds of networks, and functional constructs where different kinds of networks provide different capabilities. There's also just community stuff. So Base is a bit of a religion, Linea is a bit of a religion, Arbitrum's a bit of a religion. These are tribal things. Ethereum, Bitcoin, etc., very tribal also. And so there will be that sort of social inertia that probably maintains some divisions.
Okay, so definitely a multi-chain future with a lot of...
But it's also, I think from the end user's perspective, it's just going to be applications.
Sure.
And we're gluing all this stuff together as we speak so that it works, feels more homogeneous and works fluidly.
So that's been a big problem for Ethereum usability in the past, and it's definitely become better, but still not fully fixed, I'd say. The layer 1, layer 2 interoperability. What's missing? Like what's going to happen going forward that will make that feel more seamless?
So we did this divergent phase where we had lots of builders and researchers figure out how to scale horizontally and vertically. That's gone well. It introduced fragmentation. We knew it would. So the next phase is what we're in right now, which is convergence, which is sewing everything together in interesting ways with intent-based architecture, with AI, working across different networks, with solver networks. I'm just taking intents and figuring out where to get the activity done on different networks. SDKs will enable builders to just put different kinds of activity on different chains. Just fast communication channels being worked on across is a project that's driving a lot of that activity. It's happening. It will accelerate. Another direction for the Ethereum ecosystem is to really beef up layer 1. And so that's happening in terms of increasing gas limits. It's happening in about being worked on now, but probably launched a year from now. The Glamsterdam hard fork, where we layer 1. One of the techniques for doing that is to enable zero knowledge proof precompiles. We'll have layer 2 infrastructure sitting inside layer 1. We'll still be able to have layer 2s, but they'll be able to access code inside layer 1, which will make things more efficient and bring much greater synchronous or near synchronous composability.
So do you think that the end state of this is a user will just come to an app, they won't know what's happening, whether they're using Ethereum or Base or Linea, and any kind of transfer or communication between the Ethereum layer 2s and layer 1 will just happen instantly and the user won't even have to worry about that? Is that possible?
So the internet's been around for a long time. Web 1 has been around for a long time. Web 2 has been around for a pretty long time. It all works really smoothly. It works really smoothly because lots of technologists have taken unfathomable complexity, built it up in layers and made it all work smoothly. That enables a builder to think about, hey, what sort of use case do I offer? How do I get product market fit? How do I make it intelligible and satisfying or delightful to the user? And that's all great, except it was centralized and it turned incredibly exploitative of the user. Many aspects of big tech have effectively done things that are very destructive of the social fabric of the world. So yeah, great technology, globalized the world, but introduced some real problems. And the thesis is that, hey, we want lots of those applications. We want them to be less exploitative. We want them to do better things for more people, give people more economic and political agency. So how do we do that? We have to build an entirely new information infrastructure for the planet and really a whole new way of thinking about trust and governance around the world.
It's not a small feat. For sure.
It's the biggest transformation in recorded human history, I believe. So it's taken a few years to get to this point. What we can expect is that pretty soon, a small number of years, there are going to be a lot of delightful applications that give people much greater agency, personal bank in your pocket that you really, it's based on decentralized protocols, but you're self-custodying your own assets. And if you want to lend them out, you can do that. And you can do that on decentralized protocols. So that's the kind of example that we should expect. We should expect applications built on social graphs that you own, you control, you can monetize, you can pay people for adding value to your different social graphs. And so all of that is getting fluid. It's going to be less about which blockchain tribe you belong to in the early years of blockchain development, and it's going to be about just what applications or what decentralized organizations you choose to make use of in your business life, personal, social, etc.
So what role do you see Ethereum having in that future? Like, for example, do you think that there will be a certain set of applications that will be better suited for Ethereum versus others? Or yeah, where does Ethereum fit in this ecosystem?
So Ethereum will have a very big role. It'll have a foundational role. I think layer one Ethereum is going to be the digital asset settlement layer for the planet. So big, valuable stuff, whether it's valuable assets that are minted and issued there, whether it's valuable protocols, whether it's nation state or network state political stuff like treaties and the big heavy duty things. It'll be deep infrastructure, layer one, and some of the layer twos will probably be deep infrastructure too. If the United States has its own layer two, then it's going to have to be a really beefy thing, and it'll have lots of subdivisions. And so I kind of think of Ethereum as the central clearinghouse of lots of global infrastructure going forward. There will be many new quasi-independent networks built, but it's not easy to get security to incentivize lots of block builders or validators to run your blockchain infrastructure. And so why not pay a little bit to Ethereum because you can inherit all the security guarantees of Ethereum layer one by running an appropriately architected layer two. So I think it's going to be an economic issue. I think the reason there are lots of layer ones right now is not because they're really needed, but it's because somebody had a cool idea that might be a 5% improvement over where Ethereum is right now or where it's going. And a VC figured, hey, I can make a lot of money on this project, and I'm going to fund it, and we'll run it for a while and figure out how we exit a couple years from now.
Okay, so I guess like the outcome for those like VC chains.
Not saying I dislike VCs, because we do a bunch of that work also. But I think that's the main driver for a lot of these projects.
Yeah, for sure. No, we see it a lot. I'm sure like some of those chains will be successful though, right?
Yeah. And somebody could come along with a spectacular idea that's 10, 20, 100x better than what Ethereum is going to be anytime soon, and that could win giant mindshare. I don't think it would replace Ethereum because the momentum that Ethereum has is giant, and flipping so much infrastructure and usage wholesale to something totally new is not the kind of thing that you see in the economy normally.
Ethereum has a huge first mover advantage at being the first smart contract chain. Yeah. It just got so much, builder mindshare. Just it does have that. That's just impossible to replicate at this point.
Yeah, there will always be Ethereum killers.
Yeah. The moment Ethereum was born, that was going to happen. All right. I just wanted to ask you to wrap up. We've seen, I tweeted about this, how the narrative for Ethereum has really come back to the first days of, like the very early days of Ethereum, times at the Miami house, like people were talking about the next Bitcoin, the world computer. So I've seen kind of the memes around ETH just like really becoming more simple, more kind of focused, which I think is a good thing for getting just like the broader public to understand what ETH is about. So to you, what's your preferred meme for ETH? Is it like digital oil, world computer, next Bitcoin? Like, how would you pitch, or how are you pitching ETH to like just like institutional investors or like just like everyday people?
Yeah. So we pitch Ether and Ethereum differently to different kinds of actors depending on what they're interested in. And we can do that legitimately because Ethereum is so much, can do so much. I think of Ethereum as civilization scale infrastructure. I think of it as a new trust foundation for the planet. I think of it as digital oil or Ether's digital oil. I think of Ether as the highest octane trust commodity that the world has ever seen, that powers transactions on this new kind of software, trustware, the Ethereum technology. And so it's too big to describe with one metaphor, which is why we use all of them. And yet Tom Lee came out with this simple statement a few days ago, which kind of captures it all and is really intelligible by the lay audience. He said, Ether is the next Bitcoin. Actually, he said Ethereum's the next Bitcoin. That it's pretty true in the sense of the impact that it will have, and the fact that Bitcoin is in its moment of mainstream acceptance because it has a very clear use case, and Ether and Ethereum are just getting there. We're about to cross the chasm into mainstream culture.
Awesome. Okay, I think that's a great place to wrap up. Joe, thank you so much for joining me. This was a pleasure.
Thanks, Karen.
As always. And yeah, great to see all the things that you're doing on Ethereum, and amazing to have this conversation just a few days before Ethereum's 10th birthday.
Have you bought a present yet?
Maybe I should just buy more ETH. Thanks again.
Cool. Thanks, Karen.